Hi, Niro Pillay here from Investment Rise. And in this video, I want to talk about the three major factors that contribute to capital growth. Now, there's a whole series of factors, yes, that actually will contribute to prices growing and you making a gain on your property. But if I could bring it down, I'd say there's three major factors. And the first one, probably the most important one, but yet ironically one of the ones that very few people talk about, is incomes. And more specifically, incomes related to affordability. So what do I mean by that? Well, what I want to look at when I'm looking at an area to determine, well, what's the likely capital growth and are we going to get the capital growth that people are talking about, is, well, how affordable are the properties, both to buy and to rent, relative to incomes? So this is the reason right now where properties in Sydney for me really are a no-go, because their prices are so high and that the relative to incomes that you're just not going to get the rental return because people can't afford it. And when people can't start to afford the rental returns, eventually the gap between the rent you receive and the price is too high. The investors can't afford the prices, and homeowners can't afford the prices, which is going to cause some long-term flatlining in the Sydney and Melbourne markets. In fact, Melbourne, which is a little bit ahead of Sydney, prices are actually starting to go backwards in some areas. So you want to make sure that you're looking at incomes versus affordability. And right now, for me, to get the rental returns that I believe you require to make sure that when you buy an investment property, it doesn't cost you more than a cup of coffee a day, and that's really one of our key criteria at Investment Rise, you need to be looking at a price point anywhere from about $300,000 at the real lower end to about $550,000. So that's where I'm looking at right now. Yes, and obviously stay well away from the unit market. You want to be looking at anything with land right now because there's such an oversupply of units anywhere. But anything with land, that's the kind of price point you want to be looking at. So first criteria, income versus affordability. Second criteria is supply versus demand. But more accurately, even if there's increasing demand for property, because right now people are saying, well, look, how can you talk about oversupply in Sydney and Melbourne when there's migration, people from overseas coming on board? So there's an increasing demand for property, and they're right, but it's only half the equation. You need to look at the rate of increase in demand versus the rate of increase in supply. And right now, with the unit market right across all capital cities really in Australia, at least the major ones, the rate of supply, the number of apartments coming online far exceeds the demand. And that's going to cause some major issues. So when you're looking to invest in areas for capital growth, you want to make sure that to the best of your ability, whoever's helping you has done their research and can show you why there's more demand for these properties. Are there more people moving into the area? Does council have to make new land releases so they can cope with the demand? Make sure you're looking at that supply and demand. And one thing I always say is just follow the people. Look at the demographics. Look at where people are moving to right now. When you follow the people, you're stacking the odds of success in your favor. And the third factor that contributes to high capital growth, long-term infrastructure. The key thing there with long-term infrastructure is, yes, you want to see what kind of investment's going into the area: roads, airports, shipping ports, schools, shopping centers. Absolutely, that's key. But the next thing you want to look at is, has any infrastructure construction started? You see, there's often the case where governments and councils will promise the earth, but they'll say something's coming in 2 years and they don't start for 20. I've seen it time and time again. So what you want to make sure is, has infrastructure actually started? Has soil been turned? Because infrastructure begets infrastructure. And once you start seeing large infrastructure projects coming online, you start seeing people moving into the area, you start seeing their incomes make affordability very, very straightforward and easy. Now you've stacked the odds of capital growth in your favor. Let me know what you thought about this video in the comments fields below, and if you've got any questions, I'd love to answer them. Speak to you soon. Bye.